Oil supertankers, they need a long time to stop and turn around. And it's been a similarly tortuously slow process in agreeing an end to the trade sanctions with Iran. With such a long forewarning, oil traders have had plenty of time to steer clear of the crude from one of OPEC's normally big producers. And more oil is definitely coming. By the end of this year, we should see from Iran another 325,000 barrels of oil per day onto the market, according to consultants Energy Aspects. And that added Iranian crude should soon steam its way, legally, around the world's oceans. Now, given the need to move that oil, one might have expected the supertanker business to hot up. Well, it hasn't actually worked out that way. So far this year, spot day rates for very large crude carriers, also known as VLCCs, have fallen sharply from the highs of just a month ago. Still, last year was arguably a pretty good one for VLCC owners. The price to ship oil was double the 5-year average. With those kind of potential profits out there, that tends to tempt the greedier ship owners. So after 5 years of declines, tanker new build orders have rebounded, and they could hit new highs, according to Arctic Securities, as you can see right here. And this potential bubble of supply, understandably, has brought a pause in the 5-year surge in oil tanker rates. Add to these deliveries any older Iranian vessels which should return to service, and things look, frankly, even less rosy. Assuming that relatively few were in use before sanctions ended, the Iranian fleet could add another possibly 5% to supply, according to the analysts at Vessels Value. Now, if VLCC rates do keep falling, and frankly that is a big if, given more oil traveling on the world's oceans, one might ask if tankers could be used for floating crude storage. You know what, don't go there yet. True, oil future contracts do trade at a premium to current prices, and that does make normal storage profitable. Yet to store oil on big tankers profitably, covering the longer-term charter costs plus others, well, you need a much larger futures premium than is currently in existence. You probably need double what you have now. So Iran will eventually put both oil and tankers onto the market. But with spare oil storage still available in the US and elsewhere, VLCCs will not be called on for storage soon. Indeed, when traders can profitably park crude oil on VLCCs, that could signal the bottom for oil prices.